Yeah, and it does strike me that we've been talking about stocks.
Mm-hmm.
Bonds are the other most major asset class, and index funds exist there
Yeah.
too.
Yeah,
And you definitely, diversification and bonds also helps. I will say the bond market is like infinitely more complicated than the stock market is.
Yes.
So people don't talk
The
about
most
it nearly as
common
much.
that you'll see in most like 401k allocations, or that you'll see if you go read, like find who are the top bond funds, they're probably going to mask or mimic the index that's called the US aggregate index.
Yeah.
Is the most common. And then there's also municipal bonds that you can invest in if you have higher income in states that have higher income tax, so that you don't have to pay some of the tax on that. State and federal income tax on that. And then you'll also, there's also just US bond markets as well. You can see those too, but there's so much to see there. The things that you have to make choices about there are, how long do you want to be invested in the bond market? Meaning, like, so we have, like, you get a 30-year mortgage, right? That bank is making a relationship with you for 30 years. You can easily have bonds that will mature in 30 years, and they'll give you a little bit more return versus one that you invest for 6 months and then it rolls over and you have to get your money back and go buy another one. So you can buy funds that do things from 6 months of turnover or 90 days of turnover and less. Those are like the US money market funds that give you basically a what's called a risk-free return, in a sense, to the market, because it's the US government giving you an interest rate that they can just print more money if they have to. They can't go bankrupt. So the chance of them not paying you back is really small, all the way out to like very, very far 30-year bonds and everything in between. And you can buy funds with those or individual things with those and taxable accounts. In your 401ks and whatnot, you're going to use bond funds.
Yep. And similarly to our discussion of asset allocation, of you want to know the time frame during, after which you need this money. And that's a good way of figuring out what kind of bonds you need. Like, when do I need this money? So I need it in 5 years. I could buy a bond fund that matures in 5 years, or even an individual bond that matures in 5 years.
Yeah. And we could have, like, you probably do a whole episode on this because it gets really geeky really fast. I spent a lot of time studying it when I was getting my CFA, but there's this thing that you call duration that we pay attention to when we look at bonds. And basically what it means is how sensitive is the bond price to a change in interest rates. Which essentially just means, because people usually think that like bonds are really stable and they're not going to move a lot. But in the 2022 downturn, we actually saw bond move down a lot. They were actually down about 17% because of the interest rate moves that happened. Chances of that happening in the future are a little less because we have higher interest rates now than we did back then. But that's still just something to be mindful of. It's just craft a solution that works for you.